and welcome again to episode 9. I'm Dr. TonyVercillo, your host for this podcast. The purpose of this episode is to provide you with additional insight into the stock market and to provide further steps to have you set up a sound investment strategy. Similar to episode 2, I will cover a variety of ways to possibly make money in the stock market. As always, be sure to get advice from a licensed professional. All the tips I mentioned in these episodes are merely my suggestions and opinion. You need to get additional support from a professional before implementing any of the tactics that I mention. You know, Benjamin Franklin once said that money is of a prolific nature. Loosely translated, it means money begets more money. You need some money to make money, right? That's what everybody says. And although this is somewhat true, as long as you invest something, $5, $10, $20 a week, it doesn't really matter, and do this over 20, 30, a prolonged period of time, you will have that evasive pot of gold at the end of the rainbow. Okay, the success tip this week centers around the traits that I feel you need to excel in the stock market. Be sure to assess your current state of mind by ranking yourself on a scale of 1 to 5 as to whether or not you exhibit these traits. To excel in the stock market, you need to be able to have a couple of traits that'll make you good at it. First, extreme patience. The stock market is a long-term play, not a short-term gain. In real estate, it's location, location, and location. And in the stock market business, it's patience, patience, patience. Invest for the long term. Secondly, you have to have analytical skills so you can do the appropriate research and dissect each of the stocks that you're going to pick. Tenacity. You have to have tenacity to stay constantly on top of tweaking the portfolio and making decisions to buy, sell, or hold a stock on a continuing basis. And then finally, you need to be unemotional when it comes to the stock market. Don't be picking stocks based upon a feeling or a whisper somebody told you about. Do it based upon the analytics and the data. What does the data tell you? Remember, each stock should be analyzed for earnings per share growth, dividend payout, its position against the 52-week high and low, whether or not the market makers are giving you a buy, hold, or sell signal, and then finally, how many hedge fund managers are also investing in the stock. If there's 50 hedge fund managers investing in a stock, and there's a strong buy from 6 out of 7 market makers, the odds are you should buy that stock. So again, it's not as difficult as we make it out to be. It's a little bit of science and a little bit of art. You know, as Warren Buffett often says, don't make a stock pick based upon a feeling. Okay, even Warren Buffett, the Oracle of Omaha, uses analytics and a deep understanding of the management depth of a company before he invests $1. By the way, since this episode focuses on the stock market, there will be no formal stock pick this week. Although in the secret episode, I give you a bunch of stocks to consider. All right, now let's get to the better understanding of the stock market. There are basically 6 types of stocks you can invest in. Blue chips such as Coca-Cola and IBM. Dividend stocks such as AT&T and Altria. Growth stocks such as Amazon. Speculative stocks such as Tesla and Uber. Cyclical stocks such as Apple. These stocks tend to follow the economy. And finally, defensive stocks such as Walmart and McDonald's, which behave independent of the market, relatively speaking. So there's 6 types of stocks. In secret episode attached to this week, I literally give you a list of 15 stocks to dissect and potentially invest in a long-term play. I also describe in that secret episode how to get paid dividends each and every month of the year. So join my Patreon family and gain some insider secrets. If you remember in episode 2, I espoused 3 types of portfolios: growth, dividend, and speculative. This recommendation is still solid, as many of the stocks I just mentioned to you spill over into other categories. For example, although Coca-Cola is considered a blue chip stock, it can also be viewed as a growth stock. So what do I want you to do? Right now, I want you to go set up portfolios in one of the brokerage accounts, let's say E-Trade or something, and I want you to invest $1,000. Go get it somewhere. I don't care where you get it. Go get $1,000. Invest 25% in dividend stocks, 25% in growth stocks, 25% in defensive stocks, which you could also place into a separate portfolio or fold it into one of your existing accounts, and 25% in AI/tech stocks, which gets placed into your speculative account. If you're skittish about this whole thing, then just replicate what Warren Buffett does. If you want, open up a portfolio, invest in American Express, Coca-Cola, Moody's, Bank of America, Apple, Amazon, and Chevron. Those stocks represent the overwhelming majority of Warren Buffett's portfolio. So just mimic it and see how it goes. All right, there you go. Your Warren Buffett portfolio. He invests a majority of this portfolio in these stocks. So leave it alone and let it bake, baby. All right, gang, that's it for this week. As always, leave me a review, send me a comment, tell me what you'd like to see differently, what you want to see that's better, what do you want me to delete, how I can help you. Signing off, this is Dr. V. Remember, gang, the tortoise eventually beats the hare. Patience, my friends.